Some people like to invest in dividend products. Other people like to invest in specific companies. And other people like to invest in ETFs. If you want a high yielding dividend play and you like exchange traded funds that you don't have to control by buying individual stocks, then Jepi seems like a solution for you. Jepi is brought to the market by JP Chase. Jepi is run by two senior bankers at JP Chase that have decades of experience between each other. It is an actively traded fund, and the expense ratio is 0.35%. Jepi literally stands for the JP Morgan Premium Income Trust. The reason why it's called premium income is because they pay out a dividend every single month, which is really good if you are retired, about to retire, or you have this in a tax-deferred account because you don't have to pay taxes on the dividend plays. There's something called CAGR, or the snowball effect, when it comes to investing into dividends. You can choose to reinvest your dividend plays into your specific stock or ETF, and by doing so, you continuously buy more shares of this, and by doing that, you're expanding your ownership of that ETF or that stock, and by doing this, you're going to increase your dividend payments and then reinvest it, so on and so forth, hence the name, snowball effect. Jepi pays a very lucrative 12% or close to it over the last year. However, this is an extremely fluctuating amount, sometimes more, sometimes less. This month, I received my dividend payment, and if you calculate all the numbers together, it was actually just north of 9%, which falls very short of the 11.5% that we got last year. However, we have been here before, and we have had smaller dividend payments in the past, and Jepi made up for it later on in the year. In a moment, I'm going to go to my computer. I'm going to compare Jepi to the S&P 500. I'm also going to show you how the Jepi yield is doing. But before I do, Jepi has 120 plus or minus companies that are in their portfolio. Those 120 companies are from the S&P 500. The S&P 500 has 500 companies under their portfolio. Most of the companies that Jepi invests into give a yield. However, that yield is right around 1.5% to 2%. So the question is, how does Jepi get you 12% or so, or even 9% or 10%? How is it possible? 80% of Jepi's investments, 80 to 85 actually, goes into these stocks, while 15 to 20 go to something called an ELN. An ELN is a derivative of stocks where they sell covered calls. And it literally stands for an equity linked note, ELN. Most of the returns that they're able to garnish and produce for you is by selling those covered calls. Hence, while the market is more volatile, they're able to produce more returns. As the market is going to calm the F down, they're going to produce less returns when it comes to the dividend yield. A lot of people accuse Jepi of being a dividend trap. And a dividend trap is basically when a company offers a really lucrative dividend, but at the end of the day, the underlying asset, the underlying company, stock, ETF is shit. So let's say you're getting a 5% dividend, but every single year the company drops by 7%. Therefore, making your returns on your dividends null and void. They cancel one another out. However, with Jepi, this is not the case so far. And even though Jepi might trail the S&P 500 at some point in time, because of their dividend yield that they're producing, they actually outperform the S&P 500. But during the last bear cycle, Jepi actually outperformed the S&P 500, and they didn't need their dividends in order to do that. I think Jepi is a very intricate product, and I think that Jepi is pretty cool if you have those type of accounts that I mentioned before. Any of your IRA accounts, individual retirement accounts, or if you need it for added income if you're an older person. If you are, say, 25 years old, you have to pay taxes on every single dividend that you're getting, and you're just putting it in for that. Personally, this would not be my strategy. However, my strategy and your strategy can be completely different because I don't know your situation as you don't know my situation. I'm going to go over to my computer right now and I want to show you some charts and I want to show you how Jepi has been acting in the last dividend payment. I want to compare it to the S&P 500 and then I wanted to give you two alternatives to Jepi. Before I do, if you want to support the channel, I have channel membership down below. On the weekends, I try to do something completely different. During the week, I cover Palantir a lot. On the weekends, I'm trying so hard to bring you guys content that has nothing to do with Palantir. Therefore, I'm bringing you Jepi's video today. And earlier today, I did a really cool video about being able to get your first mortgage due to the economic uncertainty and the quantitative easing that's about to happen with the bank relief funds. The current price of Jepi is $52.53. In a moment, I'm going to show you a chart of the price movement. Give me a moment. The dividend yield they're claiming is 12.13%. However, I noticed that that's not actually the case. I'm going to show you in just a moment the actual dividend that we're getting right now. The last dividend payment that we actually got was 0.41. The one before that, 0.44. The one before that, 0.57, 0.61, 0.60. So as you can see, there has been a decline in these interest payments, in these income payments, the dividend payments, whatever you want to call them. However, we've been here before. And as you see, the payments go up, then they go down, so on and so forth. This is how the dividend payments look like all the way from the beginning. As you see, the dividends was 0.49, went down, up, went down. And then we were even down by the 0.26, 0.32, 0.3s, and then it went up. And this is the magic number right here. This is where we got this 12%. All the way in the beginning of February 2022, 0.38, 0.46, 0.58, 46, 51, 62, 49, 55, 48, 60. As you see, it completely varies how much returns Jepi is actually going to give you. And the reason why it varies is because of the volatility of the market. How much money can they make with the covered calls? Remember, it is volatile. And over the long period of time, Jepi is not going to give you 12%. I believe that Jepi is going to give you right around that 7 to 9% return through the dividend yield. This is the dividend growth year over year. This was a very lackluster month. We're actually down negative 11%. But if you go last month, it was actually up 16%, up 24%, up 60%, up 65%. It's been in an absolute tear, as you can see over here. If you go back to the beginning, it's negative 20%, negative 11%, negative 25%, negative 21%, negative 28%, negative 23%, negative 15%, and then boom, it goes all the way up. There's a lot of volatility in Jepi's dividend plays, just like there's volatility in the market. I don't think a lot of people are talking about that, and a lot of people are just selling, clicks and likes just to say, yeah, Jepi gives you 12% return. It doesn't necessarily give you that return. But with that said, you're still getting a pretty lucrative return. Let's do some quick math. The current price of Jepi is $52.53. So let's take 100 divided by 52.53. You're going to get this number. Let's times it by the current dividend, which was 0.411 times 12 equals. So right now, the current dividend yield that you're getting on Jepi is right around 9.4%. Although it's not that 11.5% that we got last year, the price does fluctuate. And I still think that we're going to get double-digit returns from Jepi this year because there's going to be a lot of volatility in the market right now. The market was going down, but I do believe that the market is going to shoot up right now and there is going to be a mini bull run followed by probably a pop in the market. When? I don't know, but this is going to increase the volatility, which means this is going to increase the amount of dividends that Jepi is able to give you. This is a chart comparing Jepi to the S&P 500. Over the last 5 days, Jepi is up 1.4%, S&P is up 2%. Over the last month, Jepi is down 3.3%, S&P is down 2.3%. 6 months, Jepi is down 3.6%, while the S&P is up 0.4%. Year to date, 3.56% down for Jepi, while the S&P is up 2.4%. And over the last year, both Jepi and S&P are down. Jepi being down 13.7%, while the S&P 500 is down 12%. But there is some additional math that you need to do. S&P 500 gives you around a 1.7% dividend yield, while Jepi gave you 11.7% last year. If you take 11.7 minus the 1.7, you're right around 10%. So Jepi, right off the bat, outperforms by 10%. So the difference between the S&P 500 and Jepi needs to be around 10% for the S&P 500 to outperform Jepi. However, Jepi is starting to give up that dividend race. So I would say that the number should be around 8%. So Jepi outperforms automatically with the dividend plays 8% the S&P 500. So as long as the S&P does not outperform Jepi by more than 8%, it's an even race. I hope this makes sense, and the numbers are not 100% exact, but I hope this gives you a general understanding of the differences, not only of the share price, but also when you take into account the dividend yield. These are some alternative plays if you want to get a little more aggressive or not as aggressive and still have a very lucrative dividend play. I personally own all three of these plays. You have Jepi, you have Schwab, and then you have Devo. Schwab is in the blue, Jepi is in the yellow, and Devo is in the aqua. Over the last year, Jepi is actually outperforming all of them. Over the last 6 months, Jepi is underperforming all of them. And over the last month, Jepi is underperforming all of them. At the end of the day, Jepi is not that good of a growth stock. However, everything could change in the future. You literally are investing in Jepi just for the dividend yield. If you want to invest in Devo, Devo is a little bit more aggressive. They also do covered calls and they also pay monthly. And Devo is giving you just north of a 5% dividend yield, which also fluctuate. And if you want to invest in SCHD, they pay a lucrative 3.5% dividend and they don't pay monthly income. They actually pay quarterly dividend every single 3 months. At the end of the day, I think all three of them should be in your portfolio if you really like dividend plays. I have all of them. I will continue to have all of them. I like and enjoy my dividends, and I have them in my son's portfolio as well. Guys, let me know in the comments down below what you guys are doing. And most importantly, make sure you keep it clean in between because hygiene is very, very important. I'll talk to you guys later. Have a good weekend.